Hi, welcome back to Joe Blogs. In today's episode, I want to talk about the Russian economy and specifically the impact that the fall in the value of the Russian ruble should be having on the Russian economy. Now, as you'll know if you follow the channel, the data that we receive in terms of the Russian economy is extremely limited at the moment. We're having to pick things out of very small amounts of information and try to extrapolate trends to evaluate exactly what is happening on the ground in Russia. And one of the things that we're really struggling with at the moment are the official inflation figures. The Russian ruble has been one of the worst performing currencies over the last 12 months. It's fallen in value by around 2/3. And when we see currencies falling at that sort of rate, it usually results in extremely high levels of inflation. Now, immediately following the invasion of Ukraine, Russia took the decision to increase its interest rates from 7.75% to 20% as an emergency measure to try to combat high levels of inflation. And the immediate impact of the war on the value of the ruble was devastating. It fell to over 130 against the US dollar. Now, the Russian central bank subsequently stepped in and supported the value, but since they've abandoned that policy, we've seen the value of the ruble cratering. And in today's video, what I want to do is delve down into the detail of what's been happening. We'll have a forensic look at the movements in the value of the ruble, and we'll compare what's happening in Russia to what happened in Turkey over the last 18 months. Turkey is a country that we've been following closely on the channel, and during 2022, the value of the Turkish lira collapsed. And as a direct result of that, inflation rose up above 85%, one of the highest levels in the world at that time. And the reason that that happened is very simple. Turkey is a net importer, and the things that it's importing are priced in overseas currency, usually dollars or euros. And so when the value of the lira fell, everything became relatively more expensive in Turkey, and that drove up inflation. So that really should be happening in Russia right now. A 2/3 fall in the value of the ruble should be resulting in inflation of 50, 60 or 70%. But as you may have seen from the recent videos that I've posted, inflation in Russia is nowhere near those levels. It's actually lower than some of the developed economies in the West. And the big question is, how is that possible? Now, one of the potential theories here is that Russia doesn't actually import a lot of goods. It's self-sufficient, and therefore what's happening in international prices has no bearing on what's happening in the Russian market. And in today's video, I'll have a detailed look at the level of Russian imports, what's been happening over the last 12 months, and see whether that gives us a good explanation. We'll then have a look at exactly what has been happening with inflation. And then finally today, I'll wrap up with my summaries to what I think is going on in Russia right now and what's likely to happen over the course of the next 3 to 6 months to both the Russian ruble and inflation. But before we get started on all of that, once again, thank you so much for all the great comments that you've been posting. Really appreciate those. And also thank you so much to everybody that's given me a super thanks. That is amazing. Really, really appreciate it. And also everybody that's bought me a coffee. I've got a lot of coffee to get through, but I really appreciate that as well. And if you'd like to see more videos like this, more face-to-face videos that I'm not posting on YouTube, and also be able to avoid all of the adverts, then please check out my Patreon channel. However, if you don't like Patreon and you would like to support the channel, please have a look below where you'll find links to buy me a coffee, as well as YouTube's super thanks and membership scheme. This chart shows the exchange rate between the US dollar and the Russian ruble over the course of the last 5 years. And the reason I'm showing it over 5 years is to really highlight the rapid decline in the value of the ruble over the last year or so. Now, if you follow the channel, you'll know that we've looked at this graph a number of times. And immediately following Russia's invasion of Ukraine, the value of the ruble collapsed and at one point was actually trading for around 135 rubles to $1. On this chart, the highest point is showing at around 125, but the intraday price actually spiked at 135. However, at that point, the Russian central bank stepped into the market. They started buying rubles, and you can see that within a very short space of time, the value of the ruble actually increased to around 50 to $1, which was actually the strongest level that it had traded since 2015. However, as soon as the Russian central bank stopped its policy of buying rubles and the currency moved back towards a free float, you can see that there has been a dramatic fall in the value. And between the middle of June 2022 and today, the value has fallen from around 48 rubles to $1 to almost 100, which means that over that period, it has halved in value. And when you see a currency falling at that sort of rate, it tells you two things. Firstly, there are major problems in the economy of that country, because the value of a currency is generally linked to what's happening in the economy. So if the economy is going into freefall, then the currency will follow suit. And the other thing that it tells us is that it's very likely that inflation in that country will be going through the roof. Now, if you follow the channel, you'll know that we've been talking about what's going on in Turkey for the last couple of years. And Turkey has experienced similar problems to Russia in terms of its currency. In 2022, the value of the Turkish lira collapsed, and as a direct result of that, the country experienced very high levels of inflation. So let's take a look at exactly what happened in Turkey and see how it compares to what's going on in Russia. This chart shows the exchange rate between the US dollar and the Turkish lira over the last 5 years. Now, Turkey had actually been experiencing relatively high levels of inflation for a long period of time, somewhere in the region of 20%. And towards the end of 2021, President Erdogan decided that rather than following traditional economic theory, whereby when you have high levels of inflation, you increase interest rates to try to suppress spending and therefore bring down demand and ultimately prices. But rather than doing that, President Erdogan decided that he was going to introduce a contrarian policy whereby during a period of high inflation, Turkey decided to reduce its interest rates. And the introduction of this contrarian policy had two direct impacts. Firstly, the value of the lira started to fall dramatically, and secondly, inflation started to rise. So let's take a look at what the impact on the Turkish lira was of the decision to start lowering interest rates. On the 1st of November 2021, $1 was trading for around 10 Turkish lira. However, by the end of December 2022, $1 was trading for around 18.6 lira, which represents a fall in value over that period of around 86%. And if we now have a look at what happened to inflation during that period, you can see that at the end of November, inflation was running at around 20% in Turkey. However, by the end of December 2022, it was sitting at more than 64% and actually had been at 85% the previous couple of months. And the reason that there's a direct link between the value of the currency and the level of inflation is that Turkey is importing lots of goods, and the vast majority of those goods, including oil, gas and food, are priced in overseas currencies such as US dollars and euros. So at the start of this period, a product that was costing $1 would have been priced in Turkey at 10 Turkish lira. However, by the end of this period, that same product priced at $1 would have cost 18.6 Turkish lira in the home market, and therefore the fall in the value of the lira was one of the major factors driving up inflation. And this is a feature that we see time and time again when a country is experiencing a loss of value in its currency, it drives up inflation. So economic theory tells us that the significant fall in the value of the ruble that we've seen over the last 12 months, more than 65%, should be resulting in high levels of inflation in the Russian economy. Now, obviously, there could be a counter-argument here if Russia isn't importing any goods. So let's have a look at Russia's current levels of imports. Now, briefly, before we have a look at Russia's imports, I thought it was worth having a look at the balance of trade, because Russia is a net exporter, and the balance of trade basically tells us the difference between the value of all of your exports and the cost of all of your imports. And this chart shows the movement in Russia's balance of trade over the last 12 months, and you can see that the last official figures that have been posted for August 2023 show a positive balance of trade of just under $11 billion. However, I think what's interesting about this chart is that the current levels are significantly lower than Russia's balance of trade at the end of 2022. In September 2022, the balance of trade was almost $23 billion positive, and by December that had risen to $24.7 billion. However, as you can see, in January 2023, the balance of trade fell to $9.4 billion, and over the last 8 months, the balance of trade has actually been in single-digit billions on 5 occasions. So there is a clear downward trend here, and one of the reasons for that is the increase in the cost of the imports. This chart shows the monthly cost of all imports in US dollars for Russia, and what this shows is that over the last year, the cost of all imports per month has ranged from $22.5 billion to $29.7 billion. And in the last 3 months that we have data for, June, July and August, the cost of Russia's imports has been above $25 billion. Now, if we quickly jump back to the exchange rate chart between the US dollar and the Russian ruble, this time 12 months ago, $1 was trading for 60 Russian rubles. and the total cost of all of Russia's imports 12 months ago was $23.7 billion. So at the exchange rate of 60 at that time, those imports would have cost 1.4 trillion rubles. If we now look at the current exchange rate of $1 for 97.5 rubles, the most recent figure for imports of $25.4 billion equates to just under 2.5 trillion rubles. So whilst the cost of the imports has only risen slightly in terms of the US dollar value, in terms of rubles, we've seen an increase of 1.1 trillion rubles, which equates to an increase of around 79%. And this movement in cost represents the actual price that Russian citizens will have to pay for all of these goods in the Russian market. And therefore, logically speaking, you would expect inflation in Russia to be running at somewhere between 75 to 85%, in a similar fashion to what we just talked about in Turkey. When the value of the lira fell significantly, inflation went sky high and was actually above 85% for a number of months. So let's have a look at exactly what has been happening to inflation in Russia. This chart shows the movement in the official rate of inflation in Russia over the last 5 years. And what this shows is that prior to Russia's invasion of Ukraine, which commenced on the 24th of February 2022, inflation was running at around 9%. Immediately following the start of the war, there was a large increase in inflation, which jumped to around 17.5%. However, during 2022, inflation came down rapidly, and by December 2022, the official rate of inflation was 11.9%. Now, despite the fact that the value of the Russian ruble continued to fall in the international markets during the course of 2023, inflation started to reduce, coming down to 11.8% in January, 11% in February, and then there was a remarkable fall to 3.5%, which is very difficult to explain. Normally, when there is a huge drop in inflation, you would expect either interest rates to have risen dramatically to bring down spending and therefore adjust prices, or some of the seismic events to have taken place, such as a huge increase in the value of the ruble, which therefore improved the purchasing power for Russian consumers. However, there is nothing tangible with which to link the huge fall that we saw in inflation in March. We then saw another fall in inflation to 2.3% in April, which actually gave Russia one of the lowest levels of inflation anywhere in the world at that point. And this was at the time when the Russian ruble was completely crashing. So economic logic tells us that at that point inflation should have been sky high, but during that period Russia was the envy of the rest of the world. If you remember back to that point in time, this was when a lot of other countries were hiking interest rates to try to bring inflation back under control. Many countries around the world had inflation rates of between 5 and 10%, compared with targets of around 2%. However, since April, we have actually seen an increase in inflation, rising to 2.5% in May, 3.3% in June, 4.3% in July, 5.2% in August, and 6% in September. So the trend in inflation over the last 4 months is what we would expect from a country with a currency that is crashing in value. However, the absolute levels here are far too low. As we saw from the data on Turkey, when your currency is dropping like a stone, inflation should be rising rapidly, well into double figures, and probably into the 20s, 30s, 40s, 50s, 60s, 70s, and 80s. We're not seeing that in Russia. We are seeing an increase in inflation, but it is very small. It's going up by 1% per month, despite the fact that the ruble has fallen in value by more than 2/3 over the last 12 months. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking a lot about the fall in the value of the Russian ruble. And you may be sitting there thinking, does the value of the ruble have any impact on Russia, or is it just a measure that nobody cares about? And I think what we've seen from today's video is that the value of your currency is really important. The reason that the economic theory links the value of currency to the strength of an economy is that, generally speaking, if your economy is doing well and you're selling things to the rest of the world, then other countries will need to buy your currency to be able to trade with you. That increase in demand for your currency pushes up its value and therefore reflects the fact that you're doing very well. And the opposite is also true. If your economy isn't performing well and nobody wants to trade with you, then that generally means that there'll be a fall in demand for your currency, and so the price will fall. And as we've seen from the data in today's video, the value of the Russian ruble has fallen by around 2/3 over the last 12 months. So that tells us that there are serious problems in Russia. The ruble is currently one of the world's worst performing currencies, and that's despite the fact that the Russian central bank have been trying to support its value. If they hadn't been doing that, it's likely that the value of the ruble could have fallen even further. And the reason that the strength of your currency is important relates to your imports. When you're buying things in the international market, they are generally priced in dollars or euros or Chinese yuan or Indian rupees or some other currency. And so you then need to apply an exchange rate between that currency and your home currency to get a price that you're going to sell those goods to your consumers. And in this situation, it's obviously the Russian ruble. And the dramatic fall in the value of the ruble over the last year or so tells us that prices in Russia should have been going through the roof. As we saw from the Turkish example, the fall of around 85% in the value of the lira equated directly to inflation of 85%. So it was basically a like-for-like movement. And broadly speaking, that's what you would expect when you get such a dramatic fall in the currency. So applying that logic to Russia tells us that the 65% fall in the value of the ruble should have equated to inflation of around 60 or 70%. However, the official statistics we looked at actually showed that inflation was down to 2.3% at one point, one of the lowest rates in the world. And that really doesn't make any sense. And as we saw from the data on Russia's imports, Russia is importing a significant amount of products, more than $25 billion worth every single month. And that's been consistent over the last year. So we haven't seen a massive reduction in imports, which theoretically could have explained very low levels of inflation. And although we are now starting to see an increase in inflation, it's very small. It's 1% per month. And the current level of 6% really doesn't equate to what's happening with the ruble. Even with the capital controls that have been brought in by President Putin recently, whereby he's now forcing some of Russia's largest exporters to deposit 80% of all of their foreign currency in Russian banks, and then sell 90% of that currency and convert it into Russian rubles. So even with those measures in place, that doesn't go anywhere near close enough to explaining why inflation is only running at 6%. So I think the overall summary of today's video is that there is no logical explanation that links what's happening with inflation in Russia to what's happened to the Russian ruble. The dramatic fall in the value of the ruble should have led to a huge increase in inflation. That is an absolute given. And the fact that it didn't puts a major question mark over the official inflation figures coming out from Russia, because it's very difficult to explain away how you can be purchasing $25 billion worth of goods in the international markets, importing all of those into Russia, and at the same time, the value of your currency has fallen by more than 60%, and that only equates to an increase of 6% in inflation. That equation, from my perspective, just simply doesn't stack up. So hopefully you've enjoyed today's video and you found it thought-provoking, because that's one of the reasons that I'm making these videos, to get you thinking about statistics. Just because somebody says this is what's happening doesn't mean that it's 100% true. You should be looking at figures and questioning whether or not they make sense. Linking things like movements in inflation, movements in interest rates, and what's happening generally in a country's economy, and making sure that you're happy that all of those things stack up. And I think right now there is a major question mark as to how all the pieces of the Russian jigsaw fit together. So I'll keep you posted on any further exciting news on the Russian ruble. If you've liked what I've said today, please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.